Hi, good morning. My name is Scott Forcino. I'm an associate broker with eXp Realty in New York City in the metro area. Today I have with us Karlos Zambrano, who is a loan officer with a very well-known lender. We're going to give the floor to Karlos, learn more about him, the mortgage climate today, the market trends, and his company, and how he serves clients. Good morning, Karlos.
Hey, Scott. Yes, my name is Karlos Zambrano. I'm a mortgage loan officer. I'm with Caliber Home Loans. We have an office in Melville, Long Island, and in Newburgh in Orange County.
That's special. Yeah, I know, Carl. I know Melville area there, the 110, right? Broad Hollow.
Yeah. We have another one in Holbrook also.
I see. It's a great spot. Middle of Long Island, for those that don't know. So, Carlos, tell us about you and your lending career and a little bit about your company, what you guys do for clients and referral partners.
Well, I've been in the mortgage business since 2006, off and on, and stopped doing mortgages or originating in 2010 when the economy wasn't so good or lending guidelines got very tight. Then I became an asset manager or portfolio manager for private equity fund that was buying non-performing mortgages. So I was a negotiator more or less for 5 years, still within the mortgage industry from 2010 to 2015. Then that business died a little bit, and then I got back into originations in 2015, and I've been doing it since then.
That's impressive. So you've seen the boom before the '08 implosion, then got involved on the other side in the REO foreclosure world for investors, and now back in the retail space.
Yes.
That's impressive. That's a varied background. I think that should offer a lot of value to your clients because you have the insight that other lenders may not have.
Yeah, well, looking at it from that end to negotiate a short sale or even a loan modification or a deed in lieu, or people falling behind on their payments, it's kind of unique for a lot of loan officers if you were not originating back then, or if you were never got into the loss mitigation part of it, and it's considered loss mitigation. So whatever happened, for example, a year ago with COVID, a lot of people were falling behind or were put on repayment plans, and people thought there were going to be a wave of foreclosures. And if you don't understand the foreclosure process or repayment plans, you assume everybody's going to foreclose, but that's not the case, and that didn't happen. The complexity of loss mitigation in itself, you have to have background behind it to understand why that didn't happen. And there was a lot of loan officers out there who thought, the loss mitigation or foreclosure worked in a particular way, in a very blanket way, and it doesn't work that way. I mean, there's investors in the back end that decide whether a loan is going to go directly to foreclosure or if there's certain steps that need to get mitigated before even starting a foreclosure process. When a loan is owned by government entities such as a VA loan or a USDA loan or an FHA loan, there's a number of other steps that need to be taken even before you do a foreclosure or any type of loss mitigation. So when I started seeing other loan officers that have a good presence, but they just don't know the loss mitigation part of it, it just kind of like lets you know who knows what, and being able to understand that also helps you to originate in nowadays environment. So definitely gave me a good background.
I see. Are you dealing with anyone that came out of forbearance and needed to refinance?
A few, but again, my business, it's never been mainly a refi business. I'm mainly a purchase business because it's been proven for longevity. It's proven that the refi business for us, at least, is kind of like just icing on the cake for us that have been doing mortgages for a while. We understand.
So let me ask you, how do you help today's buyer with this competitive market, getting their offers accepted, and again, of course, working with your agent referral partners? I mean, what does that look like?
Well, it's kind of tough because now rates are going up. There's limited inventory. So when I meet, at least with realtors, it's adjusting and training them in how to be more aggressive, more competitive, let them know the different loan programs, how and educating them also if they're listings, they have listings and they get VA buyers or people that have been pre-approved for an FHA, and how it might not be a bad buyer. It's just a loan program that they qualify for. Um, in regards to explaining the difference between a conventional loan and an FHA loan, a lot of realtors always ask, can you switch this pre-approval from an FHA to a conventional loan? And
Mm.
I tell them a lot of time, yes, I can when I can. And when I can't, I can't. But I had a conversation, as a matter of fact, 2 weeks ago with a realtor, very productive, high productive producer with Keller Williams. And she asked, why are lenders pre-approving clients for FHA loans, knowing that most sellers just want to deal with conventional buyers? And I had to educate her and say, listen, I can pre-approve somebody because the debt to income ratios are very different when it comes to FHA, VAs, and conventional loans. And I can pre-approve somebody with an FHA loan because they allow for high debt to income ratios for a 400, 500, $600,000 property. Whereas for a conventional loan that has a different debt to income ratio guidelines, it's going to be a little bit more different. So if I pre-approve a buyer for $600,000 on an FHA, and you want me to flip that client to a conventional, then that no longer will be a $600,000 pre-approval. It probably will be a $500,000 pre-approval. So then what do you do when the client wants a $600,000 property and they don't want to look at $500,000 or $400,000 properties? Then what do you do? You know, from a lender side, we understand what you like, but you, from a realtor side, you have to understand what goes into qualifying a client for an FHA or conventional. So that's just one example. You know, it's educating the clients, educating the realtors, how to better position an offer, things like that.
And I would think we mentioned ourselves how heavily you rely on referring business back and forth with your agent referral partners. Could you tell us about that and how that's been key to your success and what you think is appropriate?
Well, having the social media presence definitely helps. I am on both social media on Instagram and Facebook. I do my own marketing, and I do a lot of, I don't want to say a lot of videos, but I do network a lot as well. And from time to time, I may get some clients or that are not being represented by a realtor. So that's when we take that opportunity to refer that business to an agent, a local agent.
Mm-hmm. Well, it sounds like you're available to your referral sources and clients, and gain exposure through the social media channels and refer when you can. I wanted to announce that we're pleased that Karlos will be involved with PlugIntro, branded Zambrano, which offers his clients and relations and agent referral partners and industry colleagues the chance to promote their business. It's really not just, as I've seen and even participated in social media, which is somewhat of a commercial or broadcast. This platform that we're looking forward to hosting and administering for Karlos is a chance for his contacts and local business owners to promote themselves. And the goal is to gain a collective, aggregate, greater presence in the niche market of local business owners. And I think that is very, very underserved, where that's a niche that has been ignored. And the ideal approach is to include, in more of a proprietary platform-based model, a chance for everyone to gain and benefit. Two things. Web 3.0, Karlos, has been called trust and community. And PlugIntro was a bit ahead of the curve, or offer a platform where there is trust because it's invitation only. And someone like yourself, Karlos, has taken the time and the patience to learn the benefit for others. That's the community and that's the trust. And I think that's even more important now because all the tech and the venture capital is geared to putting the consumer to the direct provider and skipping the middleman of the agent with Zillow or Rocket Mortgage with Karlos. I mean, Karlos, I'm 55, so we have to really preserve and maintain these relations and offer value. I mean, what are your thoughts on some of those things?
Well, I think, having a local group of people that are constantly supporting each other is great, especially in the last year and a half. A lot of mom and pop stores or shops or businesses have gone out of business. So I'm all about supporting local businesses. I tend to usually, if I'm going to hold up a meeting with a realtor or an attorney, I normally try to choose a local coffee shop or a bagel spot that's locally owned rather than a commercial name spot. And just because I like to support, every weekend I take my kids to a pizza shop, brand new pizza shop that just opened up a couple of months ago, just to support the business. Simply because I know what it's like to be an entrepreneur. I know what it's like to struggle in the beginning, and I help promote it. I check in on social media and I let people. I take pictures of the pizza and whatever other things they have over there, and I let people know that if it's a good business and to come support. So I think this is a good service, you know.
And with the plug intro approach, at this point, instead of you taking a picture and sending it out to your Facebook contacts, now you'll have the opportunity to, if it may be harder for a pizza place, but any locally owned business, to actually be a member and give them a chance to promote themselves. They can't rely just on your effort. If you give them a chance, like, you gave them a fish that day, but now we're going to give them a way to fish, so they have a chance to offer insight as to what they do, and that's really, really powerful. And you're the one who provides it. I really am appreciative of the people that we have about 40, 80 people now who have hosted these platforms for themselves as agents or with agents, who realize the benefit to supporting local business, and that became a catchphrase during COVID, but I think it's always going to be important.
Yes, I think it will be.
And that's all you can rely on. I mean, also when you have local transactions between people who know each other, there's so much more accountability. It's not a website. It's not an 800. There's no one to talk to. Sometimes even with these big banks, I know the Caliber is locally owned and is a very productive member of the real estate industry on Long Island and elsewhere. But if you're going to Chase, or what's your thought on Chase or Wells or Citibank versus your own bank?
Well, I started at Bank of America, which is a big commercial bank. What I will tell you is that their business model is totally different than ours. They centralize for business purposes their underwriting processing within like different states. For example, I think it's in Georgia and a couple of states, whereas we have local processing, local underwriters, we have local offices. We're very local. So at the same time, we don't work such as the way we make money. It's a lot different actually, where we can focus on a handful of people or clients and provide a lot more value rather than a wave of clients coming in and not being able to handle all of them at once. Whereas we could be working between 10 to 20 people a month. They are working with like 100. And what I will say from experience and by talking to other people, the training might not be the best at these commercial banks. And they tend to usually hire brand new people who recently got licensed. And a lot of times they might not know everything that they should know. Whereas a seasoned loan officer rarely goes to work for a commercial bank. You normally want to work for a mortgage broker or a direct lender, simply because the pay structure is different. We are more self-sufficient, a lot more knowledgeable, more experienced, and we can provide better service, I think. That's
sure. I don't even think some of those federally chartered places like Wells or Citibank have to be licensed.
No, they just have to register a name. They have to do some fingerprinting, a background check, and you get registered. You get an MLS number, and that's all. They don't have to take a state test or a federal test, whereas we do.
I know that. And that alone is a great source of comfort and satisfaction. I know, but I also know that, and this is anecdotally in my area, I can't speak to Wisconsin or New Mexico, but a listing agent in this competitive market, I'm sure you've come across this, is going to want a Caliber approval with some DU underwriting versus some nonsense form letter from Citibank. And what's been your experience in that regard?
Well, DU is actually owned by Fannie Mae, and the standard rule is that it's supposed to be proprietary and it's not supposed to be shared. However, in some states, like in Florida, for example, especially South Florida, In some places upstate New York that I've noticed, they're requesting a copy of that DU. Some people provide it, some people don't, but yeah, they don't. The big banks don't normally provide or even run DU. Their software is totally different, and they just don't do it. And it doesn't make sense because it's part of the basics to run a DU or an LP report. It's just basics, and they don't run it. I don't know why.
It's got to be tied to money and tied to effort and tied to the technological ability. I mean, it can't be any other reason. It just might not fit within their guidelines or their approach.
Well, when I was with Bank of America, they used to use this online-based, and this is a long time ago, software, and it was very new. And I think it was just cheaper to run it that way. And I think that's the reason why it's money. If they were to use Encompass or any other services, it would have been more expensive. So I think that's why they created their own system.
Mm-hmm. Well, I asked that question because in any local market, there's really two teams. The people on the real estate team for the buyers are, of course, lender. In New York, it's lawyer, of course, realtor, title, insurance, homeowners insurance, mover, and the home inspector. Maybe that's who goes in. On the seller side, it's the agent. In New York, it's a lawyer. There's, of course, contractors to get the house ready. And it's not a contest. We're all going in the same direction. I mean, there's respect on each side, and then there's also an interest in collaborating and being cooperative and getting the deal done. The clients don't want to fight or a lawsuit. They want to move, right? So right. The problem is when someone on your own team goes a different direction, and that's why it's really important to make sure that there is so much trust and confidence. So a realtor that is aligned with you or vice versa, that the job will be done. And the buyer could be kind of the worst enemy where he or she is getting a loan from a bank that his grandfather told him about, and it's just not a relevant or a strategic or realistic member of the buying team. And that's why I'm not saying we negatively influence a client, but we certainly want to steer them in the right direction and work with our providers. And that only comes with time and experience and trust in their abilities.
Right. I think that's where experience comes in. I mean, I have met very few seasoned loan officers that do work for big banks. And I think they just do it because they're comfortable. This business is not easy to go out there and look for the business, especially to get referrals. So the big banks, whenever they misguide, I think it's just knowledge or experience. They might not know. It's like they say, you don't know what you don't know. So if they sometimes may direct something the wrong way to a client, and instead of helping, it actually works the opposite way. And working with a seasoned loan officer, definitely you lower the risk of a loan not going through. If you get
you mentioned a seasoned loan officer. This is all you do. Citibank, Wells, they open up accounts. They do savings accounts. They do kids accounts. Right. They do 9 things. So, I mean, they're not geared with a single-minded purpose like you are to make sure that this contact, this referral, this agent and the members, and especially the client, is well served, and they get to the finish line, not only closing, but extremely satisfied and extremely.
I mean, the communication and the hours of a bank is very different from ours. We typically are pretty much self-employed, so we make our own hours, and our success depends on our availability and ability to communicate. Whereas with banks, it's very rare. They have set hours and very strict guidelines or rules on how to communicate with your loan officer. So that's another, to my point, working with a seasoned loan officer, usually to me, it's a lot better.
Right. People think these closings are just a deal. I mean, I consider them to be a very, very complicated legal transaction that people aren't used to, and very sophisticated financial transaction. And they don't do it often, and they are usually hesitant and scared. And this is not, yes, there may be a hug and a kiss at the closing, But before this is an ordeal that they endure. So I think that they have to use professionals like yourself who are well connected, who want to get through every deal successfully and create a satisfied client who will rave about their services and really are not scared at the process.
True. I mean, that's like you said, everybody tends to mostly focus on the end when everybody's hugging and kissing. But the financing part of it, it's like pulling teeth a lot of times. Clients usually tell the experience that it's like, worse than giving birth, from what I've heard.
Oh boy. Oh, I don't know about that. I don't think you know about that, but
no, I wouldn't know. No,
but it's, I watched it and I've done the mortgage side of it too. So watching people get approved, and this is, I hate to say it, this is somewhat invasive. Not everyone's got 750 credit and tons of dough and great income. So it's the people who are a little bit on the marginal or on the bubble, despite their best efforts and despite being qualified. There's times when I thought, well, why are we dragging our feet? You're a great buyer. Well, they're nervous.
Well, and that goes back to the whole thing about being, for example, again, an FHA buyer. You can get a very well qualified FHA buyer, and you can get a very weak qualified conventional buyer. So just because somebody's pre-approved for a conventional loan doesn't mean that they're the best buyer. A lot of times they barely made the mark. Maybe they have a very low, very high 600 FICO scores and very tight debt to income ratios, and just maybe just enough money for down payment. You can get an FHA buyer with a stronger FICO score, lots of reserves, lots of assets, and they could be a stronger buyer than a conventional buyer. So a lot of times a piece of paper doesn't tell you the whole story. That's why talking to the loan officer gives you a better scope of that individual.
Yeah, I totally agree. And that's, if there's one area that agents and lenders need to communicate about and communicate better, it's that one, because there's this crazy idea that conventional is better. The seller won't accept an FHA. I think that distinction's gotten bigger and bigger. Years ago, it wasn't that big of a distinction. I don't know why it's grown. I don't know why that specter or that cynicism has become more prevalent. I really don't have the answer, but I know that years ago it was far less of you really didn't even have to say what you're getting. When you're getting a loan, you get a pre-approval, and no one even talked about what was the
yeah, I mean, back in the day, you didn't even need a pre-approval letter to see a property. Now everybody needs to be pre-approved and show a pre-approval letter to go to do a showing.
Right, but there's pre-approvals and there's pre-approvals. People come in, and every pre-approval says that it's subject to underwriting. Of course they are. You haven't done a verification of employment or mortgage, anything. So it's.
But some of us do it up front now. Nowadays, it's becoming a little bit more common to be more competitive to do a written verification of employment with the employer. Some of us are verifying assets and income. So it's pretty much almost a fully pre-underwritten pre-approval sometimes. So nowadays a lot of lenders are doing that. Yeah. So then by the time you go under contract, the client's already pre-underwritten, and all that you're waiting on is insurance, title, and appraisal.
Yeah. Well, I think that's an ideal approach, especially in the New York area, where lawyers are the first point of contact once an offer is accepted. I know that I have, and others have, wanted to know who's on the team, who's the lawyer, who's the inspector, who's the lender, because if there's names you recognize and you have experience with, at least you have more to go on with. We don't know who the lender is. We don't know who the lawyer. I mean, it's a team that's left. Sellers today are not going to take a team that they're unaware of. They need to know who's going to be in the deal.
Yeah, and I think it all stems from the main point of contact, or the initial point of contact, was a realtor. And just like there are many lenders, many attorneys with different procedures or processes or experience, same thing happens with realtors. There's a lot of realtors that might not know exactly how the process works or communicate, because once they get an accepted offer, everything becomes mitigation for realtors. Mitigate and send to the attorney, to the inspector, to the lender, but they're just behind the scenes.
Sure.
And if you're not mitigating or having the right people in the process, it can get really messed up.
Yeah, it could cause delays, which we can't have in this day and age. Right. The realtor pushes, they're the quarterback of this thing.
Correct.
Yeah, I agree. So for our next viewing public, I want to thank Karlos for coming. This was an extremely informative interview. I'm really proud. I want to welcome Karlos and his subsequent viewers and listeners and learners and those that promote their business to this platform. We promise to do a good job, and I really am thankful that Karlos took it upon himself to learn more and offer this to clients and contacts and referral partners. Karlos, how do we get in touch with you?
Well, you can call my cell phone. If you're in the Northeast, it's 646-397-1727. I do a lot of loans in Florida as well. Have a huge contact based down in Florida, especially Southeast Florida. And you can reach me at 786-886-8055.
Okay, that's great. I'll follow up with you. Maybe stay on a moment. Thank you very much, Karlos. Take good care. We'll talk soon.
Okay, Scott. Thank you.